G'day legends, welcome back to the channel for your latest market update. Jump up and under, let's get into it. Today we are diving into the massive gold recovery happening right now from March 31st to April 2nd, 2026. We will also break down the absolute chaos in the global oil markets and why Dr. Copper is sending us a major warning signal. Plus, we are looking at the huge US debt wall and which countries like Australia or China will win once the Iran war finally ends. Just a quick reminder that I am not a financial advisor, so always do your own research before putting your hard-earned cash on the line. Here is the big question for today. Is this recent gold bounce a total dead cat bounce, or are we headed straight for the moon? Do you think the gold price has finally bottomed out after that brutal 13% drop we saw in March? If you are stoked for this update, smash that like button and subscribe to the Gold Jumper family so you never miss a beat. Let us know in the comments what your price target is for the yellow metal by the end of the year, mates. Gold has been on a wild ride, starting March 31st at around $4,578 per ounce. By April 1st, the price shot up over 2% to hit $4,787 as the US dollar took a breather. As of right now, on April 2nd, we are sitting pretty at $4,796.42. This is a massive relief for traders after gold suffered its worst monthly drop since 2008 back in March. It was a proper self-reinforcing spiral where everyone was forced to sell their gold to cover losses in other spots. But don't sweat the dip, just more room in the pouch, because the buyers are starting to swarm back into the market. We saw a short squeeze kick in on April 1st that sent the bears running for the hills as prices climbed. Leading banks like JP Morgan are even saying gold could still hit $5,000 by the end of the year. The market is basically recalibrating after a massive liquidation of paper gold and leveraged positions in late March. It looks like the smart money is using these lower prices to stack more bars while the retail crowd is still a bit shaky. Moving over to the energy pits, WTI crude oil is still hovering around a sensitive $103.50 per barrel. The OVX oil volatility index is flat out like a lizard drinking, hitting a massive reading of 95.84. This extreme volatility is because the Strait of Hormuz is basically a no-go zone for most tankers right now. About 20% of the world's oil and LNG supply is caught in this massive geopolitical bottleneck. Iran has been playing a cheeky game of selective interdiction by letting some ships through while blocking others. If you want to sail through, they are increasingly demanding that you pay for your oil in Chinese yuan instead of dollars. This is a huge move for de-dollarization and is putting massive pressure on the old petrodollar system. The OVX index shows that traders are absolutely terrified of a sudden supply shock if things escalate further. But on April 1st, we saw oil prices edge a bit lower because President Trump hinted that a ceasefire might be coming soon. If that happens, we could see a massive relief rally in stocks, but it might take the wind out of oil sales for a bit. Speaking of Trump, he told his aides on March 31st that he wants the war with Iran finished in 2 to 3 weeks. He is even willing to pull out without the Strait of Hormuz being fully open, which is a massive pivot. This Trump peace premium is the main reason gold and stocks started jumping back up over the last 48 hours. However, the US military is still reportedly prepping for a final blow if the diplomatic talks fall apart this weekend. The uncertainty is thick enough to cut with a knife, and that is keeping the safe haven demand for gold alive and well. Iran's president is also signaling he might be down for a settlement, but only if his specific conditions are met. If the strait opens up, we will see 7 to 8 million barrels of oil per day flood back into the global market. This would be a massive inflation tax cut for the whole world and could change the game for interest rates. But until we see the ships moving freely again, the war risk is going to keep prices in a very tight squeeze. It is a high-stakes game of poker between Washington and Tehran, and the whole world is watching the flop. Now, let's talk about de-dollarization, because the golden yuan is becoming a real threat to the US dollar's crown. China has been quietly building financial plumbing to bypass the dollar, and the Iran war is accelerating that big time. For the first time, yuan-based payments have actually surpassed the dollar in China's own cross-border trade. Central banks around the world bought over 800 tons of gold last year to diversify away from the greenback. They are worried that the US might freeze their assets, just like they did to Russia a couple of years ago. Gold is the ultimate hard asset because it has no counterparty risk and nobody can just switch it off with a button. Even retail investors on Reddit are starting to realize that cash is becoming a guaranteed loss in this environment. The DXY dollar index hit a 10-month high on Monday, but has started to slip as peace talks surfaced. If the dollar keeps losing its grip, gold is going to be the main beneficiary as people look for a real store of value. This isn't just a trend anymore, it's a structural shift toward a multipolar financial world where the dollar isn't the only king. We also have to look at the massive US debt wall that is coming for us in 2026 and beyond. Over $9.6 trillion of US government debt is set to mature this year alone. Most of that was borrowed at super low rates, but now they have to refinance it at much higher current interest rates. This is going to send the government's interest payments through the roof, likely exceeding $1 trillion annually. The market is calling this fiscal dominance, where the Fed might be forced to print money just to keep the government solvent. This mathematical certainty of more money printing is a massive long-term bull case for gold prices. When the dollar gets debased to pay off old debts, hard assets like gold and land are usually the last thing standing. Some traders are even predicting financial repression, where interest rates are kept below inflation on purpose. If that happens, holding cash will be like holding a melting ice cube, so you better have some yellow metal in the pouch. The national debt is growing by over $7 billion every single day, which is just mind-blowing to think about. Dr. Copper is also giving us a massive reality check, with the copper to gold ratio hitting a 50-year low. Copper futures are sitting at $5.60 per pound, rebounding slightly from a 3-month low. Usually, copper goes up when the economy is booming, but right now it is struggling compared to gold's safe haven bid. This ratio is lower now than it was during the global financial crisis or the pandemic, which is a huge red flag. It means the market is pricing in deep uncertainty about industrial growth and global manufacturing. Copper miners are also facing massive costs because of the high energy prices caused by the Hormuz blockade. If copper can't reclaim its old highs, it suggests we might be heading for a proper global stagflation crisis. But if the war ends, copper could see a sharp reversal as factories in China and Europe ramp back up. For now, the risk-off signal from the copper to gold ratio is the strongest it has been in half a century. Keep a close eye on this one, legends, because it usually tells us what the economy is doing before the headlines do. Over in the stock market, the Magnificent 7 tech giants are finally starting to show some serious fatigue. All 7 of these stocks have declined in value this year and are underperforming the broader SP 500. Investors are getting a bit worried about the massive spending on AI infrastructure and when it will actually pay off. On April 1st, we saw a tactical bounce with the SP 500 rising 2.9% to 6,528. Nvidia jumped 5.6%, leading the tech pack as people chase the oversold bounce. But Wall Street analysts are warning that this might just be a short squeeze rather than a fundamental turnaround. Meanwhile, our very own ASX 200 had a ripper of a day, jumping over 2% to 8,671. Gold stocks like Northern Star and Evolution Mining were leading the charge as investors rotated back into the sector. The ASX is outperforming many global markets right now because we are a major energy and commodity exporter. But the Reserve Bank of Australia is still on the warpath, raising interest rates to 4.1% in March. Once the war in Iran is over, the question is, who benefits the most from the peace? Europe is currently feeling the most pain because they are so dependent on imported gas and energy. If the Strait opens, energy prices in Europe will crash, which could prevent a nasty technical recession. China will also be a massive winner because their export model is currently being strangled by high logistics costs. They have been using the Petroyuan to secure oil, but a full reopening will supercharge their manufacturing sector. Japan is also in a tough spot right now, relying on imports for 85% of its energy needs. A peace deal would lower their fuel and electricity costs, giving their sluggish economy a much-needed boost. For Australia, the impact is a bit more mixed because lower energy prices might hurt our export revenues. But a stronger global economy means more demand for our iron ore and coal, so it's likely a net win for us too. Overall, Asia is losing more than the rest of the world combined right now, so they will be cheering the loudest for peace. Alright, let's get into the nitty-gritty with the technical indicators for gold on the 4-hour chart. We have spotted a 3 white soldiers candlestick pattern between $4,576 and $4,700. This is a classic bullish signal that suggests the upward momentum is strong and likely to continue. The MACD is rising in positive territory, which tells us the bulls are firmly in control of the short-term trend. Our RSI is currently holding around 63, which is bullish but starting to get a bit close to that overbought zone. The Money Flow Index, or MFI, is also rising, showing that serious capital is flowing into gold right now. Both the VWAP and the 20-period simple moving average are below the market price, acting as support. On the 1-hour chart, we have broken above the $4,682 level and are heading for $4,855. The stochastic oscillator is also looking healthy, staying above 20 and pushing up toward the 80 mark. However, the daily chart is still a bit cautious, with the RSI sitting at a lower 32.8. This suggests that while the short-term bounce is great, the long-term trend still has some work to do to be fully bullish. There is a death cross risk on the daily if we don't hold these levels, so keep your eyes peeled for any sudden drops. The Bollinger Bands are currently in a squeeze on the daily chart, which usually means a massive move is brewing. We are currently oscillating right around the 20-day moving average of $5,009. A daily close above $5,160 would be the signal that the consolidation is officially over. Key resistance levels to watch out for are $4,821 and the big $5,000 psychological barrier. On the downside, we have solid support at $4,645 and $4,576. The Gold Volatility Index, or GVZ, has dropped to 38.89, down from 42 earlier this week. This lower volatility is actually good for gold because it means the price action is becoming less disorderly. But remember, GVZ is still over 100% higher than it was this time last year, so stay alert. The AUD-USD pair rallied on March 31st as Trump signaled he might exit the war without a full Hormuz fix. The dollar index DXY is currently trading around 99.4 after hitting those 10-month highs. If the DXY falls below 99, it could be the green light for gold to make a run back toward its record highs. For now, the technicals are mostly bullish on the short timeframes, but neutral to bearish on the daily. To summarize, gold has made a massive comeback over the last 3 days, reaching nearly $4,800. Trump's ceasefire talk and a retreating US dollar are the main catalysts driving this latest move higher. But the energy market is still a powder keg with oil volatility at extreme levels and the Strait of Hormuz partially blocked. The US debt wall is a ticking time bomb that makes the long-term case for gold look like a mathematical certainty. Dr. Copper is warning us of global economic weakness, but a peace deal could flip that script very quickly. Australia and China stand to gain big time if the war ends, while tech stocks like the Mag 7 are still struggling. Technical indicators like the 3 white soldiers suggest more upside is coming, but watch those daily resistance levels closely. So, what do you think, legends? Is this the start of a massive new bull run for gold, or just a temporary pause? Drop a comment below with your thoughts on the Iran-US ceasefire. Will it actually happen this weekend? Don't forget to like this video and subscribe to Gold Jumper for more Ripper market updates just like this one. Stay active, stay legendary, catch ya.